Most people looking to build an ADU don't have $200,000 or $300,000 in cash just laying around, so a lot of them take advantage of existing equity they've built up in their home to do a cash out refinance or take out a second mortgage like a home equity loan. But what do you do if you don't have a lot of home equity or you haven't even bought a house yet? Well, luckily there are financing options available that are not based on existing home equity. Instead, these loans are based on the as completed value of your main home plus the future completed accessory dwelling unit. Don't worry if that doesn't really make sense yet. I'll explain more about what this means throughout the video. These non-home equity based financing options fall into two categories: renovation and new construction. And the distinction between these two categories is critical as it determines what specific loan options are available to you in your situation. In the context of ADUs, renovation refers to the conversion of an existing structure like a garage, basement, or attic into an ADU. On the other hand, new construction refers to the building of a brand new structure from the ground up. So that includes both attached and detached ADUs where you're pouring a new foundation. Even though renovation loans and new construction loans are used for two different types of situations, the actual approval and lending process is the same. And that process is what I'll cover first because it's quite different and more complicated than loan options that leverage home equity. Basically what happens is first you'll apply for pre-approval with a lender to determine your creditworthiness. Then you'll need to provide the lender with a detailed budget and design drawings from a licensed and insured contractor. Once the lender accepts your project and your builder, they'll order an appraisal to determine the future value of your property as if the ADU is completed. This is that as completed property value that will be used to determine your maximum loan amount. And because these renovation and construction loans are based on the total value of your entire property, including the main home, it's important to note that they either need to be combined with the purchase of a home or the refinance of your current home. So basically, you can't have a second mortgage for the ADU. Your main home and the ADU have to be under one mortgage. So anyways, once you're approved, part of the funds are dispersed by the lender to purchase or refinance the main home, and the rest of the funds are held back in an escrow account and are periodically released to the builder as they complete different milestones during the construction of the ADU. So for example, once the builder pours the foundation and the lender confirms that the builder poured the foundation with an inspection, then the builder gets paid for the foundation. Keep in mind that you'll likely have to make interest-only payments on the amount that you've borrowed so far during the course of construction. Once the project is completed, the main home and the ADU are both rolled into the same mortgage, and you'll have to begin making the regular monthly payments towards principal and interest. Before I get into the specific financing options for renovation and construction loans, I want to highlight how my partner Realm has helped many satisfied clients save 20 to 45% on the cost of building an ADU, including this recent garage conversion. Realm is a home advisory company that simplifies the entire ADU building process by helping you plan, design, finance, and complete any ADU or renovation project. They'll help you determine which ADU designs are feasible within your local zoning and building code. Then they'll leverage their data to get accurate cost estimates and potential rental income numbers, and tell you which ADU configurations will have the highest return on investment. If you decide to move forward with a project, then they'll go out and find highly vetted contractors and negotiate with them on your behalf to get you the best possible pricing. Realm will even help you find and secure financing, and they provide continued support throughout the entire process to make sure that your ADU stays on schedule until it's completed. I've included my affiliate link for Realm down below in the description, where you'll get $150 off if you start a project with them. With that said, let's get back to the financing options. There are three scenarios where you can use financing to build an ADU without using existing home equity, and I'll give you specific loan options for each one. In scenario 1, you purchase a home that's already built and then build an ADU. In scenario 2, you refinance a home that you already own and then build an ADU. This is not a cash out refinance because you aren't borrowing on the equity in your main home. You're borrowing on the future as completed value of your entire property once the ADU is complete. Then there's scenario 3, where you build an entirely new main home and an ADU. So let's talk about some of the specific loan offerings that are currently available for these scenarios, some of which are even backed by the government. Let's focus on scenarios 1 and 2 first, where you purchase or refinance an existing home and then build an ADU. Fannie Mae, which is a government-sponsored entity, has the Homestyle Loan. This can be used to build ADUs that fall under both the renovation and new construction categories. So that means you could use the Fannie Mae Homestyle Loan to build a new ADU from the ground up, or convert an existing structure like a garage or basement into an ADU. Next is the FHA 203K Renovation Loan, which can only be used for ADUs that fall under the renovation category, where you convert an existing structure. So with an FHA 203K, you would not be able to build an ADU that requires a new foundation, but you can convert a structure that's already on your property, even if it's detached from the main house. Next is Freddie Mac's ChoiceRenovation Loan, which is more similar to Fannie Mae's Homestyle Loan, where you can use it to build an ADU that falls under the renovation or new construction category. And the ChoiceRenovation Loan is the only one on this list that lets you count rental income in order to qualify. The final option for these two scenarios is not a government-sponsored loan, and that's the all-in-one or construction to permanent loan. This can function as both a renovation loan and a new construction loan and follows the same approval and lending process that I described earlier, but since it's not a government-sponsored loan, the details and loan terms are unique lender to lender. Because Fannie Mae, FHA, and Freddie Mac don't directly lend money to consumers, borrowers who want to use these government-sponsored mortgages must first find a lender who offers this type of loan product. To find lenders, just start by contacting your local bank, local credit unions, or other lenders in your area. Let them know that you're interested in a home style, FHA 203K, choice renovation, or construction to permanent loan to build an ADU. And if they don't offer this type of loan, ask if they can recommend a lender that does. And note that for all of these mortgages, lenders will have their own down payment minimums, max loan to value ratios, and loan terms, so make sure to shop around if you can. Here's an example I found online of a very helpful list of all the ADU financing options available in Oregon. If you can find a similar resource for your area, then that would be a great place to start. Now let's talk about scenario 3, where you're building a brand new main home and an ADU. There's really only one general option in this case, and that's a new construction loan. These loans go by various names that I've mentioned before, like construction to permanent, all-in-one, or other custom construction names, but they all function similarly to the loans I've previously described. Each lender who offers a new construction loan to build an ADU may have different rules for qualification, and the terms can vary quite a bit. I actually have a few great videos on my channel about how to apply and get approved for a new construction loan if you want to check those out after this video. Let's quickly touch on some of the downsides of using renovation and new construction loans for building an ADU. One reason that these non-home equity-based financing options aren't very popular yet is because they are generally harder to get approved for, since they involve more work on your part, the lender's part, and your contractor's part. Also, ADU appraisals are notoriously low, which can sometimes make it difficult to get approved for a loan amount that will cover the entire construction cost. These loans typically have higher closing costs than a home equity loan, HELOC, or cash out refinance, and they all require a minimum down payment. But even though they aren't perfect, the financing options I covered today still give people that don't have a lot of home equity a chance to build an ADU. If you're curious how much rental income you can make by adding an ADU to your property, watch this video here. And if you want to save 20 to 45% on the cost of building an ADU, check out my affiliate link for Realm in the description.